In this video, you're going to hear from Florida real estate broker Tony Martinez, and he says the state's in really big trouble as Florida's about to see a wave of sellers underwater, and many of these will be selling short, which means that they are selling for less than they owe on their mortgage. Tony believes that it's not just in Florida, that nationwide sellers are going to be underwater, and that's why he's traveling around with his coaching program, teaching agents how to help people avoid foreclosure. Now, Florida's kind of unique in nature. He actually refers to the Florida real estate market as the story of two tales. So it's not just the fact that people over the last several years overpaid for the real estate, but there's another side that people are actually now being priced out due to losing their insurance policies or having property insurance really go through the roof, no pun intended, and rising property taxes are just taking these financially stressed out homeowners over their limit to where they will have no choice but to sell. I hope you enjoy the show. Tony Martinez, man, welcome to our show. I'm excited to dive in with you. Gosh, I tell you, I'm not going to call you Dr. Doom because I know you're better than that, but you hover in a space that is well needed right now. And, you went through the '08 crisis and many of us think that we are not only going to see something like that, but maybe even worse. But Tony, we all know that the bailouts have been, out of sight. I mean, and we know that this COVID money is finally running out November 30th. We've got, trouble on the horizon. But anyway, you are a short sale expert. And you've got training courses and you teach agents how to deal with it. You deal with the public directly, and a lot of people reach out to you. Mm-hmm. We're going to drop all your information in the show notes. But Tony, welcome to the show, and tell us, are you seeing trouble out there on the horizon?
Oh, first of all, thank you so much for the opportunity to be on your show. I've been following it for a while and I love it. And yes, absolutely. I don't get invited to a lot of social gatherings because people say, here comes Dr. Gloom and Doom. But I'm just a realist. And what I have been noticing, especially for the past few months, is that the situation is getting dire for a lot of American homeowners. And maybe it'll be as bad as 2008. Maybe it won't. I don't have a crystal ball. But here's what I've always said, Todd. For every single person going through foreclosure right now, it's bad enough. We can't get consumed with, how bad is it going to be in comparison to 2008? And here's the analogy I use. 2008 was like you standing on a rock on a shore and 100-foot tsunami was coming your way. It was that bad, right? This time around, it may be only a 30-foot tsunami. Does it really matter? When you're standing on that rock? And so that's kind of like the message that I've been out there for the past 2.5 years now, trying to get the industry to wake up and go out there and approach these homeowners that are struggling.
A couple of million people have used the COVID forbearance. There was very little to prove that you were having hardship due to COVID. And the government, I think in the beginning, was trying multiple things, from delaying the payments, having a big lump sum payment in 6 months or 5 months or whatever. Then they realized, hey, if they're not making their payment now, they're not going to make it in 6 months. So they started kicking it on the back end. Mm-hmm. Then we know that they suspended payments up to 6 months for each borrower that was having trouble. Kind of tell us, what your thoughts are. I want to dive in a little, more of your market in specific, and then we'll kind of broaden it and talk about nationwide. But are you starting to see, first of all, do you feel that in the last couple of years, the buyers in the Florida market, and you're all over Florida, do you feel that they bought overpriced and that a lot of these borrowers are, underwater?
Well, yes and yes. So, my office right around the corner, there's a real nice subdivision. One of my agents listed a property, sold it for $60,000 above appraised price. Now, what does that do to the comps in the entire area? Does that mean that every other house there is now worth $40,000, $50,000, $60,000 more? No, I think this is the mania, the people just buying whatever they could get their hands on. Did a lot of harm to our industry. Yes, we in Florida did benefit because we're in an area that's very attractive, and because Florida stayed relatively open during COVID, everyone was flocking to here. But one of the things I've always said is that individuals that purchased in the last 2 years with very little down payment are probably, if not underwater now, soon to be underwater, because we're starting to see prices ease back. We haven't seen them drop, but we're seeing the asking price drop significantly.
Well, we know that delinquencies are up, and I'm going to take a look at a write-up here by the Mortgage Bankers Association that says that there's a uptick in delinquencies, mortgage delinquencies, and they know that this is about to get worse. Are you dealing with, and you're a short sale expert, can you kind of tell everybody why you're preparing for short sales and what that means?
Yeah, that's a great question. See, back in 2008, I went to work for the brand that I now own, the Certified Distressed Property Expert, in an environment where no one knew what to do with short sales. And you know what a short sale is? When you owe more than you can sell your property for, you're underwater. And the only way to exit with any type of dignity in that type of situation is to approach the bank or banks if you owe more than one loan and ask them to accept less than the amount owed. And easier said than done. And the industry wasn't ready. Now, the course that I now own paved the way. We grew to about 50,000 members in only 2.5 years. And I was their lead instructor back then. I traveled all over the country for 2.5 years teaching audiences, primarily realtors, how to survive in the market that we had back then. Now, what we're seeing very differently now, and this is part of me adjusting my message, is that, let's say back then, for every 10 foreclosures, maybe 7 were underwater. Now it's absolutely the reverse. And this is both an area of opportunity and it's also scary that so many individuals that are going through foreclosure right now actually have equity. Yet they're letting the bank take their homes. They should be listing with a real estate professional that knows what they're doing, get the property sold, cash out whatever you can cash out, and avoid all of the negative consequences of having a foreclosure on your record.
Today's video is sponsored by none other than SachsRealty.com, where we help buyers and sellers connect with some of the best agents nationwide. If you need a rockstar agent in your city, simply go to SachsRealty.com, click on the map of the United States, drill it down to find an agent in a city near you. Now, this program is relatively new, and we have agents that are coming on daily. We actually interview them, pre-vet them, make sure that they have great reviews and that they're full-time in the business. So if you don't see somebody in your city, that's okay. Send me an email, ts@sachsrealty.com, and I'll be glad to help you connect with somebody in your town. Let's take a look at this article here. And this is mortgagebankersassociation.org. So this is an association that you know, Tony, but for everyone listening, that kind of serves the mortgage industry. And they're kind of, sending out some warning signals here. This was dated on November 9th. It says the delinquency rate for mortgage loans on 1 to 4 residential properties. And what I want to explain here, guys, is that, anything over 4 units really takes it out of what's considered residential. So, you can be a house hacker, so to speak, or, a small investor that buys up to a 4-unit building where 1 unit you live in and you rent the other 3, and that would still be considered a residential property. But anyway, it says that delinquency rates increased to a seasonally adjusted rate of 3.62% of all loans outstanding at the end of the third quarter of this year. It says the delinquency rate was up 25 basis points from the second quarter of 23 and up 17 basis points from 1 year ago. And Tony, the thought process here is there are still a lot of people that don't have to make their mortgage payments until December 1. So if you would have applied, the shutoff was at the end of May 31st, 2023. That was the shutoff for you to get 6 months of forbearance, meaning that you didn't have to pay your mortgage payment. That ends. This is the red flag. That now ends. These delinquency rates are going up. And the other thing here is that it's suggested that distressed homeowners may be utilizing available loss mitigation options that prevent a foreclosure start Additionally, accumulated home equity may be enabling some homeowners to sell their homes well before the foreclosure becomes a possibility. And that's what Tony's talking about right here. So, for those that are listening that are struggling right now, the idea is not to wait. I think people, Tony, have gotten to the point that they think that this can is going to continue to be kicked down the road and that these banks are not going to foreclose on them. And, so many people, millions of people have taken advantage of, for one way or another, of either having their loan modified, whether they take the principal balance, stick it on the back, go from a 30 to a 40-year mortgage if you're VA or FHA. But, this is exactly what you're talking about, Tony. So, I mean, what are you seeing? Are you starting to see an uptick in calls and, people reaching out to you saying, hey, how do I navigate, my situation?
Nowhere near where it should be. What happens is this is an emotionally draining experience for a homeowner. I can't think of anything more devastating than losing your home, right? As opposed, well, of course, losing a family member and all that. But, let's face it, losing your home is a terrible thing to go through. And what tends to happen is most people, instead of seeking out assistance, they'll just shut down. They'll just put their head in the sand and hope and pray that the situation will go away. And it really won't. And to give people an idea of timelines, it all begins with missing the first payment. You get a grace period, 30 days. When you miss that first payment, now you're technically in default. Are you in foreclosure? No, you're not. Because what happens is most of the servicers, they're in no rush to initiate foreclosure. But they are required to initiate foreclosure when there is no other option. But there is a federal law that states that servicers cannot initiate foreclosure until that homeowner/borrower is at least 120 days into default. So you have those 4 months, and those 4 months are critical for someone that might be able to work out a modification. See, one of the things I've always taught is in order to do an MOD, a mod, you need a JOB. You gotta have to have some income to justify it. And if someone has lost their job, and I really hope that we can get into what my concerns are about the labor market and layoffs and everything else, if they can't prove that they can make these payments going forward, they're not going to be able to work out a modification with the bank. And here's the other issue. What if they had a 2.5%, 3% mortgage and they did a modification now, at 6.5%, 7%? Their payments would actually increase. They couldn't afford the payments before. How are they going to afford the higher payments? So what I try to do is I'm not reaching enough consumers yet. I'm hoping that through your podcast we can. I'm focusing on the industry, real estate professionals. We need them to mobilize, to get out there and be first to approach these homeowners, because who's incredibly aggressive in approaching them? The scam artists. The con men, they're out there knocking on doors almost immediately, taking these folks for a ride.
Yeah, but Tony, the problem is, man, a lot of what you're saying going to the industry is falling on deaf ears because agents are broke too. So their sales are down right now, and that requires them to either get out and knock on doors or send out postcards. Postcards are expensive, do marketing, advertising. So I think you're right. Going to the consumer is probably the best choice. We know that there's a recent rise in 30 to 60-day delinquencies. We know that for a fact. We know that, basically homeowners have been able to curtail foreclosures based on the COVID money that's ran out. And we also know that the largest delinquent sort of category as far as mortgages are FHA.
Yes.
And these have a tendency to be the most the riskiest loans. And if you guys have a FHA loan, don't take it personally. It's just a fact. Typically you're putting less money down, your credit's not as strong. And, a lot of the government-backed loans are designed. VA is number 2. So 9.5%, it says, of the FHA loans are in a delinquency status, 3.76% of the VA. And this is our veterans, guys. And the problem with this program is that there's zero down payment requirement. These are probably the ones that are underwater the most on their mortgages should they need to sell. So they it's just terrible to, that we put these programs in place that people can get in with no skin in the game, right? And they're set up in a lot of ways to fail right from the very start. God forbid any kind of a downturn, economic downturn, personal finance, issue, that you fall late in your mortgage. And then conventional is about 2.5%. So, FHA is in serious delinquency here. And so what is the process now, Tony? I know before, I went through '08 too. And, there's a lot of people sitting on the sidelines. They're like, man, I just want to scarf me up a deal. And, and somebody else's hardship, they're going to, lose their house, whatever. Short sale is not a slam dunk. And I know what happened before was you had to meet certain criteria. You had to, write a letter at one point. You had to do this and that and everything else. And it took months. How long is it going to take? Let's say somebody is short now. They want to sell. They're panic selling. They're a distressed seller.
Right.
And they are now contacting you or an agent, us, whatever. And they're saying, look, what's the house worth? We go, you're underwater. What's the process for these borrowers?
Okay, well, it all begins with knowing whether they're in a positive cash position or not. Here's a mistake a lot of real estate
underwater.
agents,
Let's say they're underwater.
If they're underwater, then what they need to do is be approach someone that is skilled at doing short sales. And just because you can doesn't mean you should. Every licensed real estate agent in a state can list a short sale, but most should never do it because they have no clue what they're doing. It is a very unique process. It takes a little bit longer. There's a lot of paperwork involved. There are qualifications that the sellers must meet. All of these things have to be done either personally by the real estate agent or a professional negotiator that they've hired to work with them. But there are still a lot of misconceptions about short sales. Number one is, yes, they can take longer than a traditional sale, but the situation is much better than it was in '08. See, in '08, none of us knew what we were doing. And now most of the industry doesn't know what they're doing because so many of the realtors that we have right now weren't licensed back then. But the banks, they do know. They do have their processes. So that's a good thing. And it really comes down to working backwards. The biggest issue for a homeowner in foreclosure is, do you have a sale date? That's the most important thing they need to look at right now, because I teach that you can list that property for sale as a short sale up until the day before the auction or sale date. But you have to know if one is in place, and you have to have the strategies to implement to go ahead and hopefully get a stay on that, get it pushed back. Now, you mentioned FHA. Yes, FHA is the subprime loan of today, and those numbers are going to be rough. And FHA in particular can take a little longer because FHA still requires that the borrower go through what they call their waterfall process. They don't just jump into a short sale. They have to show that they attempted to do a modification and that didn't work, or the borrower said no to the modification, and now they can move forward with a sale.
Tony, is it possible for somebody to do two types of modifications? So, I've heard where somebody says, hey, you only get one shot at it, and if you can't come out of delinquency, then there are no other modifications. Is that true, or is there, can they get another modification?
That's usually the case, because here's the challenge, right? Let's say the bank is going to modify their loan. You're having to qualify all over again. So that's where the income comes in, the stability, everything comes in. And if you were on a modification and you missed those payments, for all intents and purposes, it's game over at that point. Now, one of the things I learned a long time ago was never say never and never say always. So I say typically and usually, but the probability is that, no, you were given one chance, you weren't able to stay on task, you're not going to be given another one.
Yeah. So if an agent gets a call from somebody and they're underwater and it is truly going to be a short sale, does the agent contact the bank?
No, that's a great question. The first thing I teach on real estate agent when somebody calls them, the very first question out of your mouth is, are you currently listed with another real estate broker? Because you know that happens, right? And what I teach the agents is, since they called you, ethically speaking, you are allowed to engage in a conversation with them. But let's face it, there are limits to how far that conversation can go. The second question they ask is, do you have a sale date? And in many cases they do. And here's what I do, Todd, and I'm a big believer in this. I take the Reagan approach: trust, but verify. If I'm asking someone, do you have your property listed with another agent? And they say, no, I'm in the MLS double checking. And if I ask them, do you have a sale date? And they say, I don't know, I'm in the courthouse site checking to make sure. Now, the very first step that they need to do is come in to the office. I'm a big believer that they come into the office because I have to make sure that this person is ready, willing, and able to move forward with getting them out of the situation that they're in. Depending upon how much time there is between the time we make contact with them and the sale date will determine the strategy that we use. But you cannot speak to the lender unless you have a signed authorization to release information from at least one of the borrowers on the loan.
So if you have a contract in hand, so let's take it down the road. So we have a property, let's say it's listed at $450,000, and maybe that $450,000 will get them out. But they have a sale date, for the foreclosure, and you have an offer, you've advertised it, you've gotten all of your disclosures, because you have to disclose to the other side that they haven't paid their mortgage, and that, because that can harm the buyer if they're waiting around trying, putting an offer in. If they think that it could be, if they don't know that it can be foreclosed on, that's another problem. But now you have an offer, let's say it's $50,000 less than what will satisfy that loan. How do you initiate a short sale at this point, 2023?
Wow, great questions. Well, here's a big difference from back in the day. Back in the day, the lenders were overwhelmed with the amount of foreclosures that they had, and they were giving them away. So what we tend to have that mindset coming into this. One of the things I teach is, don't worry about the label. And I do an illustration. I say a property goes on the market on a Monday and it's a regular sale for $350,000. And the house immediately next door to it, identical, goes on sale the very next day as an REO, real estate owned, foreclosure. How much would they list that for? And then I say on Wednesday, the third house, identical to the first two, goes on the market as a short sale. How much should that property be listed? Todd, you'd be amazed how many real estate professionals get the answer wrong. Because the correct answer is 350, 350, 350. I gave it away when I said they were identical. So real estate agents need to know that don't look at the label. Consumers, investors, don't look at the label. It's market price. That's what the banks want. The banks are expecting market price less any repairs that are needed. Does that make sense?
Yeah, of course. But are you going to be able to get the bank that's owed, $50,000 more to take that market price, or are they going to foreclose on it? And, nowadays, look, I've seen banks do crazy things, man. I've been on both sides of it, right? Yeah. So, helping the buyer buy the short sale, and I've been helping the seller sell a short sale. And nowadays, the banks, they'll foreclose on a property, get in there, do any repairs that they feel is necessary. I'm even seeing where, I've seen banks like Wells Fargo, offer to rent the property, on a, how do you get them? I guess my question is, how do you get them to take it versus foreclose on the property?
Okay, so the first step would be, if I listed that property, how much time do I have before the sale date? If I don't have a sale date, or I have months before a sale date, I'm going to try to get as much for that bank as possible. You know why? Because they're expecting that. Now, if the person came to me and their sale date is a day away, 2 or 3 days away, and it is a $450,000 property, guess what? I may list it for $375,000. Why? Because I need a contract yesterday. Why? Because I'm probably going to have a foreclosure defense attorney or someone try to contact the bank or the courthouse to try to get a stop. In other words, stop the press, stop the process, at least look at my offer. Now, what will probably happen with that offer after they go out there and do the BPO, the broker price opinion or appraisal, the bank will probably kick it back and say, market price on this is 450. And then the negotiations begin. Well, yeah, I understand it's 450, but are you aware that there's $50,000 in needed repairs on the property? And this is where the skill set of the real estate agent and the negotiator in trying to get the bank to take as little as they're willing to take.
Are you starting to see people walk away from their properties in Florida?
Well, in general, there's a thing called zombie foreclosures. You probably have heard of it, right? These are vacant foreclosures. And I think that number is like about 1.3, 1.4 million zombie foreclosures across the country. And that's just heartbreaking to me, because where do these folks go? It's their property up until the moment that is foreclosed on. And in some states like Minnesota and Michigan, there's a redemption period. The foreclosure happens and they still have a year that they could try to redeem that property, and they're still in that property. But to walk away, to leave it vacant, is a huge mistake, because where are they going to go? They're probably going to go somewhere where they're paying rent at the very minimum, right? What they should do is stay in that home and do everything possible to either qualify for a modification, and when you can't, then exit with dignity by letting a real estate agent either sell it as a regular sale with equity or as a short sale because it's underwater.
Well, in Florida is a little different than here in Maryland. So what we see is that, and I've been talking about this for years on my channel, when people are losing their house to foreclosure, they're not paying for things. They're not repairing their home. And it's kind of like a double thought process. You have the ones that are, maybe they're saving money knowing that they don't want to stay in the home anymore because maybe they said, well, this home has too many things wrong with it, and I'm just going to stay here as long as I can. I'm going to save all my money, and then I'm just going to dump this thing and let it go to foreclosure, despite the fact that I've had forbearance for 6 months. And then there's the other people that are kind of hopeful that they're going to get it right. But regardless, if they're not paying their mortgage payment, they're not making repairs. So here we have to worry about, now we're coming into winter time. So what happens is, if the heat's not on, the pipes freeze and burst, the house becomes inhabitable, right? Or if the roof is leaking and they have mold that's growing in the house. So what we start to see is where people, when it's no longer safe to be in the house, is when they finally just abandon the situation. Yep. So you're not experiencing that now in Florida?
Well, we don't have a lot of winterizing here in Florida, so that's the good news.
Right.
But, the biggest concern we have is mold. And that's why if they're at least living in the property, chances are they're going to have their lights on and they'll have the air conditioning running. So we don't have the same challenges as other areas of the country.
Yeah.
But let me tell you something. If there is a savvy consumer out there, it's a Florida homeowner, because in Florida, we're a judicial state. That means that all foreclosures have to go through the courts. And people know how to play the system. They know how to work the system. And they lawyer up and they use every technique that they can to stall and delay. So they can sometimes buy a year and a half or longer in the property. So yeah, it's a different game in Florida. The foreclosures don't move anywhere near as quickly as they do in other states.
Don't take this the wrong way when I ask you this question, man. But, I always ask myself, like, why in the world somebody would want to live in Florida in the first place? And I know you like Florida. You love Florida. I mean, you built your business in Florida. But, man, you got sinkholes, alligators, now. But despite the fact, we know that the government encouraged developers years ago to develop in areas that really are floodplains, things like that. I mean, problem areas, and you're getting devastated with weather. Insurance companies are just outright canceling policies.
Yeah.
Your property taxes are going up. Not to mention, go to Florida, they're kind of really pissed off at all domestic migration, and your jobs aren't that great. I mean, the job market, you either make a lot of money or you make a little money. It doesn't seem like there's a whole lot of in between. Again, man, I was on Realtor.com this morning, and I was kind of looking at what's happening. You got about 180,000 actives, 179,419 actives in Florida right now. And I'm not talking pendings. These are active. 21.2% of them, over 38,000, have experienced at least one price reduction. And there's 303 listed active foreclosures. Now we know we know why that's low, right? We know it's low because the government has been bailing people out. But what are you going to tell these people, man, as you're navigating, through? I mean, do you think Florida's got bigger issues?
We have our challenges. Florida has always been a different state, right? As a retirement state and everything else, we were always drawing in folks that were going to retire and everything else. The cost of living used to be very low here in Florida. If you lived in up north or out west, you could come out here and live like a king or queen and buy. And that's a lot of what happened over the last couple of years. And it's really hurt the locals because they can't really compete with the cash buyers that are immigrating into the area. But I think the biggest advantage that Florida has is we don't have snow. And anybody that has ever lived or dealt in snow is beautiful, man. It's beautiful. I love it for like 5 minutes, right? And then, you go outside and you go, man, this is beautiful. Now you go, now what? Now let me get inside and get warm. And anybody's ever had to take the stuff off their car just to get going or clear out their driveway. And you know what? We don't have any state income tax. So that's a good thing. And that's drawing a lot of people in that are high income folks coming in. Now, challenges. Yeah, we do have hurricanes. Those happen, but at least we get some warning, right? The other thing is insurance is insane. Insurance is one of the biggest challenges we're having. And going into the next 2 years, that is going to cause, I think, a lot of people to bail on Florida. HOA fees are going through the roof, pardon the pun. Property taxes, insane. Now you have condos, right? Condos used to be the one place you can go to that's less expensive. Well, now you have state law in effect that associations must maintain a certain amount of reserves. Well, the assessments that are being put, especially on seniors, on folks with a fixed income, they can't afford to live here anymore. So yeah, Florida is a tale of two cities, man. We have people coming in here in droves still from where? South America. This is a beacon, especially for South America. But we also have more and more people exiting to Georgia, North and South Carolina, and Tennessee.
Now, see, I thought you were going to say, who in the world would want to live near Baltimore, Maryland? I thought that was going to be your comeback, man. I can't insult potential customers in that area. Well, you could tell them to get down to Florida, right? No, I say that with, kind of jokingly about, why would you live in Florida? But I mean, obviously, I know it has the attraction, right? But, I guess that what I'm seeing right now is that people here can't afford their mortgage payments. They buy a house, they think it's going to be a certain price, and then all of a sudden they get their tax bill, they get their insurance bill, let alone being in Florida and just flat out being canceled. And now they have to get very high expense, high cost, high risk insurance because their insurance company that they thought they had and they need to have for their mortgage just sent them a cancellation notice. Give me some thoughts, Tony. Give me your give me some expectations as we're kind of winding this thing down. I mean, do you think that you think this is just the tip of the iceberg? You think we're going to see major price reductions? I mean, what are you thinking over the next 12 months?
Well, again, that crystal ball is a little cloudy, but the listing prices have definitely come down. It's come down. As the affordability factor goes out the window, I don't think there's any choice but to see prices come down. People just can't afford to buy. And that's a huge struggle that we're in. Now, I believe there's going to be a lot more inventory on the market as foreclosures increase. Now, we could spend maybe 2 or 3 minutes talking about what I see on the horizon that's going to drive more foreclosures. And if that's okay with you, can I go through a litany of that?
Let's do it. Yeah.
Well, this is what I keep my eye. And I'm not, you've had some amazing guests on your show that are really, really numbers minded, economists and everything else. That's not me, but I can read. And I look at consumer debt right now. Consumer debt's the highest it's ever been. We're almost at $18 trillion. You look at credit card debt, the highest it's ever been. We're a little over $1 trillion, right? You got auto loans. What's the auto loans right now? That's up. I think it's $1.6 trillion right now. You have credit card delinquencies on the rise. Credit card interest rates are in their 20s right now. Auto loan delinquencies are on the rise. Yeah, you have the cost of living. The average American is paying about $700 more per month to live than the same time last year. All right, you have property taxes going up, you got HOA going up, and you have insurance going up. The American consumer is stretched to its fullest. 62% of Americans live paycheck to paycheck. 33% of Americans that earn $150,000 a year live paycheck to paycheck. You have only about 40% of Americans, when surveyed, have at least $1,000 sitting in a savings account for an emergency fund. Doesn't that scare somebody other than me?
That's terrible.
There's no cushion. So here's the thing. I've had people get in my face and say, we're never going to have a foreclosure problem because we have all of this equity. You know what my comeback is? That having equity and being able to make your payments are two separate issues. Doesn't matter if you're sitting on $100,000. If you're not working, you can't make your payments. And as far as this equity-rich nation nonsense that I keep hearing about, what I do know is that people have been using their homes as ATMs for the past 3 years. And they've refi, and they didn't just do rate and terms, they pulled cash out. They did it once, twice, thrice. All right. And so now you have HELOCs that are back, home equity line of credits. Well, those disappeared. Now they're back. Yeah, you got adjustable rate mortgages. They're back. And last but not least, one of the things that's going to impact Florida especially is all of these Airbnb short-term rentals. That is the next wave of foreclosures coming, Todd, because this reminds me of 2006 and 7 when everybody was buying second and third homes to rent out. This time around, it was short-term rentals. And you've seen what's been happening across the country with short-term rentals. Demand is down. There's an oversupply. You have cities and towns that are legislating against it, associations that are legislating against it. So a vast majority of the properties that we have down here are second and third properties. And you know the risky loans that a lot of these folks took out, the loans that are based on income that's supposedly coming in, those chickens are going to come home to roost pretty soon. So as this inventory starts to grow, we're going to see the prices come down. That's my humble opinion.
Yeah, I couldn't agree more, Tony. I mean, that's why we've been sounding the alarm. I mean, one of the things that we know is if you go out and you buy 1,000 shares of Apple stock today, or you sell 1,000 shares of Apple stock today, you are not going to move that price one bit. But you have a couple people in the neighborhood that need to panic sell or distress sell. And that doesn't mean that the property's in bad shape, but they take a couple $100,000 less than what the market price has been. And now you've moved that market like no other market. Yep. I mean, real estate is probably the riskiest in that regard. And a lot of people, and look, if I heard this once, I heard it a million times, where, you know, people say, well, real estate prices only go up. Home prices only go up. That is true on the long term.
Right.
That is never true on short-term market. And when we go up and down through the years and we have these little, you know, times of consumer stress or consumer, financial failure, that moves the needle in the neighborhood more than anything else. Tony, I tell you, man, I can't tell you enough how much I appreciate you bringing your expertise. It's so nice to talk to another real estate broker and not just a cheerleader that's out there saying, date the rate, hey, if you don't buy now, you're going to be sorry. We need to focus more on consumers. We need to do what is right and not necessarily what's right for our own pockets. How can everybody reach out to you? Are you interested in helping people navigate through a short sale process?
Absolutely. Whether they have equity or not, start with finding someone that knows what they're talking about. And I'm pretty proud of the community that we built of CDPEs across the country. Go to cdpe.com. Our email is there. Our phone number is there. If you don't know what to do, you don't know anyone to talk to, I can point you in the direction of a skilled professional in your area. I just want every single consumer out there that might be going through a challenge right now to remember these these few words, okay? Foreclosure is not the only option.
All right, man. Well, we thank you so much. We'll drop all your information in the show notes below. And guys, if you like the video, you can let Tony and I know that you did by smashing that thumbs up. And you can cruise on over to his YouTube channel as well. Show him some love, subscribe, and keep an eye out on Tony. And don't keep this information to yourself, guys. Share it with your family and friends. It is one of the only ways that we can actually get what's really happening from boots on the ground into the ears of people that need to hear it, because you're not hearing it on mainstream media. The share button is below. We'll see you next time. So I hope you enjoyed learning from Tony. And if you know somebody that's struggling to pay their mortgage and they are a distressed seller is somebody that must sell their home. Whether their home is in great shape or in bad shape, for whatever reason they must sell, you can reach out to Tony or reach out to me, and we'll be glad to point you in the right direction. As always, guys, you can drop those comments below. I read them personally, and I love to hear what you have to say. We'll see you next time.
Sachs Realty, Maryland broker number 607720, office number 443-318-4514, equal housing opportunity.